The stock market is a roller coaster. Right now it's a terrifying plunge. $4 trillion. That's how much wealth has evaporated since February. Investors are staring into the abyss. Is this the start of a dreaded bear market? Buckle up, folks. It's going to be a bumpy ride. The market is volatile. Swings are wild. Fear is palpable. Don't panic. Keep your head. Now's the time to be smart. Let's break it down. The S&P 500 is down 8.6%. The Nasdaq down over 10%. Even the mighty Dow Jones fell 1.1%. These are not small dips, these are warning signs. The bulls are exhausted, the bears are circling. On March 10th, the S&P 500 plunged 2.7%. The Nasdaq, a terrifying 4% drop. These are the biggest single-day losses in months. The selling continued on March 11th. All three major indices closed lower. The trend is not your friend. President Trump's trade war is back. Tariffs on steel and aluminum sent shockwaves through the market. Uncertainty reigns supreme. Businesses are scared. Consumers are nervous. The economy is teetering. Small business confidence plummeted in February. Tariffs are the culprit. They create uncertainty. Uncertainty breeds fear. Fear leads to selling. It's a vicious cycle. Tech stocks got hammered. The sector dropped 4.3% on March 10th. Apple, Nvidia, Tesla, all down sharply. Airlines are in freefall. Delta Airlines slashed its profit forecast. The stock plunged 14%. American Airlines and United are also down big. Automotive stocks are sputtering. Ford and Stellantis are feeling the heat from tariffs. Telecom giant Verizon tumbled 7% on weak subscriber growth. It's a bloodbath out there. Section 5. Fear grips investors. Hedge funds retreat. Investor sentiment is in the toilet. Fear and uncertainty are rampant. Hedge funds are dumping stocks. They're reducing their exposure at the fastest rate in years. When the smart money flees, it's time to pay attention. The CBOE Volatility Index, also known as the Fear Index, is spiking. This means investors are scared. They're buying protection. They're bracing for more pain. Section 6. Storm clouds gathering, inflation looms large. Inflation is the biggest threat to this market. The Consumer Price Index report comes out on Wednesday. Expectations are high. If inflation is hotter than expected, look out below. The 10-year Treasury yield is soaring. It's now above 4%. This signals rising inflation expectations. The Federal Reserve may have to raise interest rates aggressively. That could choke off economic growth. Section 7. Government gridlock, funding bill stalemate. Washington is a mess. Congress is struggling to pass a funding bill. If they don't reach an agreement, the government could shut down. Another black eye for the economy. Another reason for investors to sell. The debt ceiling debate is looming. Will Congress raise the limit, or will they play chicken with the economy? The stakes are high. The uncertainty is unnerving. Section 8. Deutsche Bank's dire warning, more pain ahead. Deutsche Bank, a major global bank, issued a dire warning. They believe the S&P 500 could fall another 5.5%. That's a significant drop. It would wipe out another $1 trillion in wealth. Their forecast is based on several factors: inflation, rising interest rates, slowing economic growth, and geopolitical uncertainty. These are all valid concerns. Investors are right to be worried. Section 9. Hope on the horizon? A glimmer of optimism? Is there any hope for the market? Maybe. Some analysts believe the sell-off is overdone. They argue that the economy is still strong. They point to low unemployment and strong corporate earnings. They believe the market will rebound once the current uncertainties are resolved. They could be right. But it's a risky bet. The market is driven by fear and greed. Right now, fear is winning. Be careful out there.